there will be an inflection point, in my opinion, where all of a sudden Bitcoin starts to do much better than the stock market.
In today's video, technical analyst Gareth Soloway believes that Bitcoin will still go down to $12,000, and even lower to $10,000, but on the long term it will go up. He also explained why he is now bullish in Bitcoin. Let's dive into the interview.
We haven't seen capitulation yet. Having said that, we are due for a bounce. We've already had a nice little bounce. It makes sense that we're kind of stalling here. So one of the interesting, this is a very minor resistance level. And again, keep in mind, usually major resistance levels cause price to pull back or stay below for longer periods. Minor resistance levels are much shorter term. So you can see right here, the high of this candle matches the high right here. And that's where we're struggling right here. So right around 21.8 or so seems to be the key level that we're watching. And if we get a daily close above that, then I think there is more upside in the near term. I do think that will happen. I think that, again, the biggest catalyst for me, and again, you're right, there's so many different weird news stories, the jobs report today, but the bottom line is, heck, we even heard about Mt. Gox potentially selling 150,000 Bitcoin. None of that's causing crypto to drop. We saw the Voyager news of bankruptcy. That didn't cause Bitcoin to drop. So that's leading me to believe that there's more short-term upside before the next rollover, right? So the first target after 21.8, if we can get through this level, is this low, which was that Terra Luna collapse. So that makes sense. That would be a little resistance. And then ultimately, if that can get broken, there's a chance we could retest this area, right? And this is going to be, when you talk about resistance levels, this is like the mega resistance level. This one, I honestly don't think it gets through. 25.5 maybe. This 28 and change, I think it gets there possibly, and then that's the next start of the rollover that I have a target down to about 12 to 13,000. I do think we could even go sub 10,000 briefly in this next phase. And I agree, you've seen people very negative, but not at the capitulation point. And again, it's important to remember that to see capitulation, you have to see people go through all stages of loss. So you have denial, there's like 5 or 6 or 7 different phases. We haven't reached the final one at this point. So I do think that we have to see that. And then I do think at that point, you put in a longer term low where you'll see the next bull market potentially start after some choppiness. Recessions take time to unfold. So you may be in a slight recession at this point, but there's still a decent job market out there, which means, you haven't seen the mass layoffs really start. I've heard, I think like Twitter said they were laying off people. We've seen other tech companies starting to talk about laying off people. So it's coming. And it's going to get worse. I think the interest rate spikes is hurting the housing market immensely, which in all fairness is probably good for first-time home buyers so that they can actually get a decrease in home values and purchase at a reasonable price. But yeah, one of the things I'm really looking for with the crypto market, and this actually goes along with the metals market too, is the US dollar. And I think that's something that not enough people are talking about. Let me show my chart here. And the reason why the dollar is important is because the stronger the dollar gets, in terms of US dollars, like when you're looking at Bitcoin USD, that's important, right? Because the higher the dollar goes, the weaker Bitcoin will naturally go because it's traded, or in this case, that's what I followed, the Bitcoin US dollar chart. So here's the dollar chart. And if I go to the monthly chart, you can really see what I'm looking at here. So there's a couple trend lines that tell me the dollar may have topped here, which to me, again, tells me if the dollar can decline, Bitcoin may catch a near-term bid on this pullback. So number one, look at that move up in the dollar since the start of the year.
That's crazy. That's absolutely crazy.
Yeah. And what's so crazy is that the whole thesis for Bitcoin was like, 2 years, a year ago, is that, the dollar is garbage because they're printing so much money. And the dollar's been the strongest thing out there. Amazing. But look at this little pivot low right here, and then this upsloping trend line. And that's getting me more like, okay, wait a minute. Did the dollar just top out today in the near term? And if we do pull back, maybe we see a little bit of an additional bid on Bitcoin. This is the daily chart, and I'm watching today's candle here because on the jobs report, the dollar spiked higher because it was a better than anticipated jobs report, which means that the Fed is likely to do 75 basis points, which is strengthening for the dollar. the news this morning from the jobs report would have signaled a jump in the dollar because it increased the likelihood of more rate hikes. And instead, after the initial pop, the dollar reversed. And that's putting in what we would call potentially a topping tail, which is a technical bearish indicator based on the candle forming today. So you combine that with those trend lines that I just showed on the monthly chart, and we may have a decline in the dollar, which to me tells me gold probably rallies, silver rallies, and potentially Bitcoin can rally as well in the near term. Now, this is very near term. I still don't think the low is in, just like you. I still think we need to see capitulation, but I do think that at least the dollar should be followed here because it is a good indicator for the potential of Bitcoin putting in a bounce or a decent little bounce here. I did think that crypto was oversold. The fact that it's holding the 2000, and this is where, so I'm a big fan of psychology in terms of human psychology and trading that. Because remember, it doesn't matter if you're trading stocks, commodities, Forex, or crypto. People are trading those. Therefore, if you analyze psychology of the human nature, you can actually learn a lot. So one of the things I'm expecting here is this little uptick in crypto. Notice it's coming back above the 2017 highs. And if we can inch up like past that 21.8-ish level, I think you'll start to see people, the human psychology is going to start ticking in here. And you're going to see people starting to say, wait a minute, it held that 2017 high, it's back above. It's going to start rotating from a very bearish sentiment into more of a neutral or bullish, which is going to get investors to buy into it. And then ultimately, as it moves up, then you'll eventually see those people that are getting bullish, unfortunately, wiped out on the next leg down. But it's just human nature, right? It's just human nature. There we go, Wendy. I see there.
The banners drive me cuckoo. I have to fix it. Go ahead, though. Go ahead.
No. So yeah, I mean, ultimately, I think that as we creep up, you're going to get people to kind of start to believe that you might have a longer term low. You'll see more bullish chatter out there in the news media, and that'll just be a self-fulfilling prophecy to keep Bitcoin up a little bit. But inevitably, the next deleveraging event will occur. The stock market will come down again as we probably go deeper into a recession, an earnings recession. And we know that the NASDAQ has been a leader for Bitcoin, and therefore 12,000, 13,000 is my next target once we come back in. But in all fairness, I am long Bitcoin right now. I'm riding it at least to 25.5, and then maybe as high as 28 or so before I look to take profits and then look for that next wave down. And I think people also need to realize that, and I understand most crypto traders were never through a kind of a apocalyptic collapse like the .coms, but I mean, that was the beginning of my trading career, and the similarities from the run up are almost identical. You had like crazy weird similarities, like the crypto market I think got to $3.1 trillion. The .com bubble got to 2.9 trillion. You had the Super Bowl, the .com Super Bowl with tons of Super Bowl commercials from .coms in 2000. This past Super Bowl, you had a lot of these crypto commercials, super weird stuff like that. But when the collapse occurred, Amazon lost 95% of its value. Now, I don't necessarily think Bitcoin will do that because Bitcoin has that scarcity aspect. You see more and more adoption, so I think that may hold it up a little bit. But by no means, I mean, you still can't have the end of the crypto collapse with tens. I mean, at this point, I don't even know how many cryptos are left out there, but there's still well over 10,000 coins, if not close to 20,000 coins. And in the .com collapse, you had bankruptcies, and then you had these .coms get bought out for like 99% discount of their valuation that was at the height. And that's how the sector consolidated. And we haven't seen that yet either. So again, you have to look at this final washout, and it's going to be painful, but at the same time, it's so healthy, right? It's the equivalent of kind of getting a virus and your body fights it off and gets stronger by fighting it off. It's the Darwinian thought process of the strongest can survive, and then they thrive because there's not all this other crap in the system. So, even though I think it's going to go lower, the longer term is so rosy for Bitcoin and some of these other coins. The regulation, but it didn't stop kind of these over-the-counter companies, these .coms that like legit, it was like a dude in his parents' basement that was like, basically created a basic shell company. And then they're like, oh, we ship XYZs, or we do pet care, or we do, and basically just because the name had .com in it it all of a sudden, I mean, it went on the trading floor and it would just like go nuts to the upside. So there was definitely more regulation than there is in crypto, but it wasn't like it is today. There's definitely been a lot of reform in the markets that has made it a lot tougher. And in all fairness, investors have become a lot more smart, a lot more wise in terms of stocks. But I still think you brought in so many new investors into crypto and crypto alone that they didn't have that same thing. And one of the things I mean, if you watch the movie, so there's two movies that are amazing. Number one is The Wolf of Wall Street, right? So The Wolf of Wall Street, that movie is, you could put crypto companies in what he's doing and it would be almost identical. I mean, the only difference is instead of running a firm, you have people like on Twitter or, these other shady characters that are just pumping, they're shilling these cryptocurrencies. And that was going on like crazy in 2021 and 2020. But the other movie is Boiler Room, which is, was the 80s. And these guys basically just would call people up and manipulate. And it is case in point, like you can plug in cryptos to those movies and it would be just like it was. It was like, I don't think we get regulation before the election. I think that to get that regulation, that's going to be forced on the politicians by that next, it's just not healthy for the system. You have to have a system that functions. And eventually, like you can put like lipstick on a pig, right? And it can look like it's functioning. At some point that collapses. And that's what we need to be careful of. And that really is, again, that's probably one of the big bull cases in the next few years for Bitcoin, is that when things really start to collapse, there will be an inflection point, in my opinion, where all of a sudden Bitcoin starts to do much better than the stock market, where the stock market is collapsing because stocks and people aren't spending, but there is this need for protection against all that future money printing that probably will go on.